question regarding scaling in, you often say traders scale in 1 point above or below and 2 points above or below. Sometimes you say scale in only when you get another good signal bar in the direction of your first position. How do you decide when to use which scale in technique? Yeah, he's bringing up a really good point. If I think the market is really range bound in a fairly tight range and not going very far, then I feel comfortable scaling in 1.2 points. On the other hand, if I think the market is doing something that is a surprise, we had an example of that, well, you could argue over here, right? Would I scale in 1 point below 28? I would not. Would I scale in below 22? I would. Why would I not scale in below 28? It's a wedge bottom, 1, 2, 3, and there's too much risk of a bear breakout. So in that kind of a situation, I would not scale in below 28. However, I know that some bulls bought above here, bought above here. This is probably not going to be a big bear trend day, and therefore scale in bulls will buy above 33, and therefore I am willing to buy above 33, thinking that we'll come at least a 50% pullback on that. A lot of times, let's see if I can find another example. So a lot of times, especially in the trading range, where there are logical sells, like here, you can argue that it's logical to sell below bar 40. And if you do, where do you start to scale in? Do you scale in above 40? I don't know. It's a trading range, you could, but once you see that, you're going to be thinking it's going higher. So had I shorted below 40 and had I scaled in higher, I probably would have gotten out on the 44 close. On the other hand, other bears will say it's coming back to that 40 low, and I'm going to scale in, but I'll wait for a bear reversal bar and then sell below that bear bar. So I'll sell below 46 and then either get out between my two entries, this low and that low, or I'll hold for a test of the 40 low. I don't know if it clearly got there. It depends on the circumstances. Usually I'm much more inclined to scale in 1 or 2 points, and use a wide stop. But in a situation where I think there's a possible breakout, I do not do the 1 or 2 points. And I talked about that over here. There was the potential for a bull breakout here. It was such an obvious short that there was a potential for a bull breakout. So I'm not going to sell above 30. Instead, I'll wait, and if it breaks out, then I'll buy, which I did. I know I'm not being all that clear because it is very subjective. I think in general, most traders who are scaling in should use the stop entry method. So if you buy and you're looking to buy more lower, wait for a bull reversal bar. For example, if you bought up here, let's say buy the 10 high, and you want to scale in lower, it's better to buy above 13 and keep your stop below 8 than it is to buy and then buy 2 points down, 2 points down, 2 points down. So I think most traders should do it that way. In the new version of the course, I have an entire video about entering late in the trend, and I'll be talking about that some in Las Vegas in a few weeks. But that is the basic idea. I think traders starting out, it's dangerous to be scaling in at fixed intervals, 1 point, 2 point, 3 or 4 points, and it's better if they're thinking of scaling in to do it with a stop entry for a second trade. Let me try to find another example. So here, for example, let's say you bought here, which you would not, because odds were there's going to be a second leg down. But let's say you bought 34, the 34 high. I would not buy the 34 low or 2 points lower if I were starting out. I would buy the 34 high, use my wide stop, and then when it reverses up above 41, buy above 41. And because I know the institutions are doing that, a lot of times I'll look at 34 and say, that's a bad buy. But I know the scale institutions are looking for a good bull bar, 41 to buy, so then I will buy above 41 or 42. So a lot of times you'll hear me say that I'm buying or that it's a reasonable buy because the scale and traders, the institutions will take that buy. I'm not sure if I'm being all that clear. But bottom line, if you're starting out, I think it's risky to sell and then sell more 2 points higher, sell more 2 points higher. It's better if you're looking to scale in, you sell, and if it goes higher, wait for a bear reversal bar and then sell below the bear reversal bar. So let's say you sold the 16 close or below 16. Don't sell more here. You wait for that to sell. You sell below 21. Okay, Al asked this question on Friday, but the audio was not clear, so I'm posting it again. Regarding scaling in, you sometimes say scale in only when you have another good signal in the direction of the first position. How do you decide which to use? Let me give you an example. Okay, let's say you bought the 47 close, right? And you start seeing it sell off. Do you buy 1 point lower, 2 points lower? No, we're in a trading range, so you can get a very deep pullback. So whenever there's a reasonable expectation of a deep pullback, reasonable potential of a deep pullback, I'm not going to buy 1 point lower, 2 points lower. If I buy that close and I decide that I'm going to keep my stop down here, the next buy is going to be above the bull bar, bar 52, right? On the other hand, if I'm buying what I think is a very strong bull breakout and I think the odds are high, there are buyers below, then I will buy 1 or 2 points lower because I think the odds of a deep pullback are small. Same with selling. I'm just trying to find something obvious, like here. Here, I think this is a bull breakout. I think we're always in long. And there's an urgency to it, or here, there's an urgency to it. So there, if I buy, I'm probably going to buy 1 or 2 points lower because I think it's a breakout and the probability is high that we're going higher and that the pullback will be brief. If I'm buying in a trading range, I think there's a high risk of a deep pullback, and I've got to be really careful buying too high and scaling in too high. So if I'm buying here, I'm buying after the market has gone up 10 bars. That is high. So to me, I don't want to be buying again here. If I'm going to be buying again, I want to buy with a stop. So I hope that makes sense. So in a trading range, I prefer a second entry on the stop. Usually, I don't buy high in a trading range. If I do, I get off pretty quickly. And instead, in a situation like this, I say, the scale and bulls will be buying here. So I start looking to buy, thinking that we're probably limited in how far down we'll go. Here, bears sell this close. I'm going to be selling below bars, or I'll be selling somewhere in the middle, thinking that scale and bears will be selling with stops.